Good afternoon, everybody, and welcome to Strategy Now here at MarketStream.live. My name is Joseph Cusick from the Cusick Group, here to give you all of the action that's happened in the first 4.5 hours in today's markets. We have a market where it's basically firmly in the red. Most of the market participants had slid to the downside, and it's based on a little bit of a cautionary tale that we have seen in other asset classes that aren't reacting as poorly, like treasuries, the dollar, and precious metals. Let's just wrap up and take a look at currently what's going on in the markets right now. Taking a look at the Dow Jones, trading down 68 points. The futures are trading at 19,787. You do have the Russell 2000 trading down $17.60 at $1,368.70. Futures have been down all day on those higher beta, smaller cap stocks here that are domestically centric. One silver lining continues to be tech. The NASDAQ is up 19.25. The futures are trading at $4,952.75. You do have the S&P 500 futures trading down $5.25. The E-minis are trading at $2,258.75. Now, as I noted, you had other asset classes that have been under pressure. Some of the most notable ones, the bonds and the dollar. The dollar has been the story for quite a bit of time. As a matter of fact, the dollar index right now is trading down about $1.25 at 101.44. The weakness started late yesterday, overnight, and into today's session, and it's on track for its second consecutive loss as the greenback continues to slide down 1.6% against some of its cohorts like the yen. The pair is now trading at 115.43. This sharp rally in the Japanese yen puts the pair at levels that haven't been seen since basically mid-December when the dollar strength really started to pick up. Also, as of note is that you have gold continuing to move to the upside, up 1.5%. The shiny metal is up at $1,183.30 per ounce. Which puts this precious metal on track for its third consecutive gain. And we haven't seen that in the metal markets, specifically in the gold markets, for quite some time. There has been quite a spike in treasuries here in the United States. It sent the financial sector to the downside, down as a sector, down about 1.4%. And it's basically the bottom of the leaderboard right now. The cyclical group has been hammered since you continue to see that rates are dropping and their bond prices are going up, especially on the 10-year part of the curve. You're also seeing other cyclical groups like industrials down 0.5%, materials down 0.5%, and consumer discretionary down 0.4%. Basically all underperforming the markets. You have the consumer discretionary sector. It continues to be haunted by the retail space. If you take a look at the ETF that tracks retail, XRT, down $1.48 at 43.69. It's a 3.3% decline. The retail space has been just on the wrong foot all day long since we had Macy's, ticker symbol M, trading at $30.70, down $5.12, and Kohl's, ticker symbol KSS, trading at $41.52, down $10.37. They basically issued really disappointing guidance due to weak holiday sales. That has put shivers across the board in that sector. Macy's shares have fallen 14% and Kohl's down 20%. Since this guidance has come out. This is shaking the bricks and mortar. It's also putting some more pressure on the likes of things like L Brand and other names that we had discussed this morning. Energy has also been underperforming amid crude's oil's poor performance as well. Crude has a change of heart this morning. It's actually pulled back after what seemed to be a positive API data inventory mark last night, where there was a bit of a draw. We actually saw that the EIA report came in. There was a slight build. We also saw that in the a less than expected draw in the nat gas sector. Both are basically either flatline or in negative territory. We have West Texas crude trading at 53.38, which right now is at the flat line. That's well off of its best levels that we saw earlier in the session. Now, what was interesting, though, is that with this remarkable pull-off in the dollar, you thought that crude would be able to hold up a little bit better, maybe even rally, but the crude contract has just not been able to move, not even in spite of the weak dollar and the weakness. Now, there is some positive notes here. Basically, you're seeing that overall for the week, all 11 sectors are still to the upside. So yes, we have a pullback. There could be some weak shorts or weak longs that are basically looking to take some profits. Maybe there's a whole plethora of other things that are coming about. But currently, right now, you have healthcare, technology, and consumer staples all up basically between 0.3% and 0.1%. The tech sector has really been the silver lining, as we noted. Some of the most notable names are Apple, Facebook, that are still strong to the upside in spite of the weakness in the overall market. You have Apple up 51 cents at 116, and that's been a laggard for the last few sessions. You have Facebook holding up about 91 cents right now in the session at 119.60. With those two names up and holding in positive territory, that's holding up the tech market specifically, and it's really holding up the general market from maybe even a potential deeper downturn. A couple other things that I want to review going into the strategy now section is taking a look at the economic data that came out this morning. The latest initial jobs report came out, and the jobless claims came out at 235,000. Well below the 300,000, and I think it's 96 weeks consecutive under that 300,000 level. The key takeaway away from that point, from that report, is going to be that there's a tight labor market condition, as basically it seems like employers overall appear to be reluctant to cut staff. We'll see if that continues. The ADP National Employment Report showed an increase of about 153,000 new jobs in December. The key takeaway from that report, basically it's the market's belief that the U.S. economy is being driven by primarily non-manufacturing jobs. And it's showing some encouraging growth characteristics that came throughout 2016 and came to an end in 2016. Should be very interesting, especially since again, we're going to see what the Trump policies are going to be about growth in the manufacturing sector. Could that add even more jobs to the doles and to these reports? Tomorrow's employment report that will be out will also be scrutinized pretty closely. All right, folks, that's it for Strategy Now. Join me at 3:30 Eastern Time where I do Tech Talk. I'm going to take a bunch of stocks that are in the highlights right now, as well as that may have binary events like earnings. And I'm going to give you some transparency and some ideas revolved around that using charts and option pricing to give you some transparency. All right, have a great rest of the trading day. And please check out our archive shows here on MarketStream.live. Take care, everyone, and have a great rest of the trading day.